Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. We made it to the end of the week. What do we got going on today? Looks like a bloodbath in the markets. Dow's down about 750. NASDAQ's down about 450. Now, we had that big up day yesterday, which was basically short covering. Short covering, they saw the market going up. They had to cover their shorts, but they put them back on today. Market is back down again, getting oversold. We're in bear market territory in the NASDAQ, bear market territory in the Russell. In bear market, so be careful because we are oversold and we may get that rally from here, but I do think we're going lower. I think we're going lower, just the way the market wants to go right now. Now, what's interesting here? Okay, so we're in a recession, right? Well, not yet. We're not in a recession yet, but the first quarter GDP came in negative 1.4%. Now, that's fascinating because, well, they predicted that we'd come in positive 1%, and we're down 1.4%, a 2.4% miss. Typically for economists, that's not terrible. I am an economist, I can say that. So what's this going to do to the housing market? Well, the housing market, I feel like we're already in this recession. I really do. Now, see, there's what's known as a reaction time. Now, the stock market, now, if I want to get out of the stock market, I can just push a button and I'm out. I mean, it's that simple. If I want to get in the stock market, push a button and I'm in. Now that's reaction time, right? Okay, in real estate, the reaction time is not quick. I want to get out of my house. I can't just push a button. It takes me 3 to 6 months minimum just to get out of my property. I got to get it ready. I got to put it on the market. I got to get a buyer. I got to get the buyer a loan. I got to close the property transaction. Sure, sometimes from the time you put it on to the time it closes, you can do it in 3 or 4 weeks. I get that. But what if you don't have any buyers? Well, then it just prolongs it. Okay, so are we in a recession? Now, a lot of people think I would argue that we are in a recession already. Now, will houses go up in a recession? Some people tell me, Mike, houses are just going to keep going up. It doesn't matter if we come into a depression or even a Great Depression. The housing market is just continue to go higher. Well, I don't think it works that way. Matter of fact, I know it does not. This will not end well, and it'll come to an end, and I already think it has. Now, when we went from 3% to 5% on mortgages, I think that is the beginning of the end. Look at the reaction time in real estate's very slow, very slow. It's going to take time to play out. But because the recession is here, and because it's very likely we might even get into a depression, houses are not going to go up. You're not going to have that double-digit inflation. You're not going to have that. Well, you are going to have double-digit inflation, but houses are not going to be increasing at a double-digit rate anymore. Now, people can't get a return on their investment. They're not going to be investing in real estate. So those investors that are in the market right now are going to be going away. Now, there's obviously sellers. They want to get out before the market comes down. And I can't blame them. I'd want to get out too. You know, I really would. If I had extra homes right now, rental homes, I'd be a seller right now. I just would. Now, principal residence, guy, it's tempting. If I were smart, I would be selling my principal residence, but I'm not. I'm holding on to that one because you need somewhere to live. Okay, so what do we got going? Well, let's talk about the mortgage market a little bit. The mortgage market has been destroyed, literally obliterated. Look at this time last year. Well, right now we're down 70% in mortgage applications from the same time last year. Now, a lot of that's the refi business. I get that, but houses are starting to slow down. They're kind of coming to a standstill. As a matter of fact, pending home sales are down for the 5th straight month. They've come down for the 5th straight month. But now back to the mortgage industry. Here's what's fascinating to me. Okay, so there's this affordability factor. People can no longer afford the home when it went from 3% up to 5% interest rates. Well, what did they do? Well, the mortgage industry goes, don't worry about it. We got these things called adjustable rate mortgages. We'll start you at 3% and we'll move you up gradually over time. Well, that gradually over time, it adjusts every 6 months, and you start at 3%. Before you know it, you're at 6, 7, 8%. You can't make the payments. Then it goes back to the bank, and then it goes to me to sell, and then the market starts coming down. But adjustable rate mortgages have doubled just in the last couple of months. They went from 5% to 10% of all mortgages are now adjustable rate mortgages. What else are they doing? They're doing interest only. Interest only for 5 years. You want to buy a house interest only for 5 years? Look at that. Okay, I mean, but that's how they qualify you. That's how they sucker you in to get into the mortgage market to get your mortgage that you can qualify for. What happens at the end of the 5 years? Well, your payment's due. It's due. You got to make the whole payment of the whole mortgage. Now, you can refinance, but who's to say terms are able to refinance then? Maybe rates went up and then maybe you don't qualify anymore. So you have to, well, you get it foreclosed upon. You can't make your payment. Okay, so we got all these people in forbearance right now. They haven't paid for, 12, 18 months. But these forbearance people, what are they doing with the money? Okay, so let's say you had $1 million loan and you haven't made any payment for 18 months. Well, do you still owe those payments? Yes, you do. What do? They tack it on to the end of the loan. They go, hey, you can refinance this loan into a 40-year loan, and that way your payments won't go up very much. Oh, this is just crazy stuff that's going on. Now, back in the subprime mess, you might remember we had this thing called, well, let's call it negative amortization. Now, what's negative amortization? Look, they could go out. Now, they could do this. They could actually go out and say we got 2% mortgages. Well, that's great, but the real rate of interest is up at 5%, maybe even 6% if your credit's no good. So let's say they come out and they say, well, 2% of $1 million is $20,000 a year. The real rate is $60,000 a year, but you don't have to pay that $40,000. We'll just tack it on to the loan. This is what negative amortization is. So that $1 million loan becomes $1,040,000 after 1 year. After 2 years, it's like a 1.1 million. But pretty soon that $1 million loan becomes $2 million. Now, this is great if houses double, if they keep going up, because then you don't have a problem with that. You go, okay, I owe $2 million and the house is $2 million. But what if houses go down and you're running a negative amortization? Well, this isn't good. This isn't good. Your principal of your balance is going up, right? But your house is going down. Negative amortization is a bad thing in a down market. It works when the houses are exploding higher, but I think that's come to an end, and that's just now they're talking about bringing back negative amortization. It's like we haven't learned anything. I mean, we lived through the subprime crisis, and I think that, the subprime market, it crashed and brought houses down. I think they would have gone down lower, but they injected trillions and trillions of dollars. Let's just call it 10 or 15 trillion dollars to pop up the housing market. Look, this is still going to end badly. It really is. And this negative amortization stuff, it just isn't going to work. I mean, there's companies out there trying to bring a product out that's a credit card. It's a credit card attached to your home equity. Now, as long as you got home equity, you can go out and buy new cars. You can buy a boat. You can buy whatever you want, and they'll just attach it onto your mortgage. Isn't that a great concept? Well, look, you cannot continue to use your house as your ATM machine, as your bank, so to speak. Look, houses, you can do that when they're going up, but they're not going up anymore. I'm telling you, they're going down and things are changing. This is going to change the mortgage market. Oh, they're trying new debt instruments, 40-year mortgages, 50-year mortgages, adjustable rate mortgages, negative amortization amortization mortgages, interest only. We'll do anything to get you into a property, to get you levered out to where you cannot afford the payments. Look at banks, they allow the forbearance, and they don't mind because they don't want the house back. If they don't use forbearance, they'd have to come and foreclose on you. Look at, there should be right now 3 to 5 million homes in foreclosure, and there's under 1 million right now. There's about 1 million homes that are delinquent on their mortgages by 6 months or more. 1 million properties. They have not started the foreclosure process on all of these, but it's coming, and they are starting. Now, I don't know why there are any foreclosures right now. Houses have been going up 20% a year, but people are borrowing more than that. They're borrowing as much as they can because they don't have money to live. Their house is the only way they can live, so they keep borrowing the money. And the banks don't want the house back, so they put you in forbearance. Well, believe me, this forbearance, they tack it onto the end of your loan. It's negative amortization, basically. And when this all runs out, well, guess what? You're going to get foreclosed on, and it's not going to end well. So I'm seeing a tsunami coming to the real estate market. I'm seeing a recession. I think we're already in a recession, and I think the housing market is going to start to see what I would call a depression. Now, if you like this stuff, give me the thumbs up. If you really like it, punch the subscribe button. Now, it's the weekend, everybody. Get out there. Have a great weekend, and we'll talk again next week. Bye-bye now.